May 11th, 2026. Guys, circle that date on your calendar because KSPI is about to drop an earnings report that could literally rewrite financial history. Whether you're an active investor, a market analyst, or honestly, just someone keeping a pulse on the massive giants shaping our global economy, this upcoming forecast 100% demands your attention. In this explainer, we're going to break down exactly what's fueling KSPI's current trajectory, the complex macro factors driving their totally unprecedented revenue forecast, and precisely what it could all mean for the broader markets.
Let's just pause and actually process that number for a second. $1.114 trillion. That is the jaw-dropping, historic magnitude of the projected quarterly revenue for KSPI. Just to put that into perspective for us, we're talking about a single quarter's revenue that rivals the absolute biggest tech titans and energy conglomerates on the planet combined. Hitting this mark doesn't just break records, it places KSPI into a completely unprecedented tier of global wealth generation.
Okay, let's dive into this, because it really is the literal trillion-dollar question, isn't it? How does any single company pull in that much cash in just a 3-month window? Well, to understand how they even attempt to reach that staggering scale, we have to look past the flashy top-line numbers and really examine the fundamental operational dominance of the company itself. You see, KSPI isn't just playing the game, they practically own the board. They are an absolute behemoth. Their footprint spans the entire globe, serving millions of active users and massive enterprises every single day. But what truly fuels this wild forecast is their sheer dominance in capturing and, more importantly, monetizing user attention and enterprise spend. They are dictating the pace of the whole sector, leveraging their massive capital to forge these strategic alliances with governments and top-tier corporations that effectively lock in their market position. Now, obviously, this kind of crazy revenue speculation doesn't just pop out of thin air. KSPI already sits on a colossal baseline of value. Their market capitalization, which is just the total value of all their outstanding stock, makes it one of the single most valuable equities in existence today. And honestly, it's exactly because of this massive established valuation that analysts are even entertaining the possibility of a $1 trillion quarter. The raw infrastructure needed to support that kind of insane capital flow, it's already priced in and it's functioning at a global scale.
So, how do financial analysts actually build this monster of a consensus estimate? Well, they've basically stacked up 4 critical components that build toward this astronomical figure. They're drawing on historical momentum and forward-looking indicators. Let's break down exactly how these 4 puzzle pieces stack up to form the $1 trillion whole.
It all starts with pillar number 1, core business growth. This is their bread and butter. KSPI's primary revenue engines, we're talking their flagship payment processing and subscription models, they just continue to post incredibly consistent, double-digit growth quarter after quarter. Scaling these existing, highly optimized products to meet this relentless global demand, that provides the critical, rock-solid financial bedrock they need to even attempt a massive target like this. On top of that stable core, you layer on emerging markets expansion. KSPI is aggressively, and I mean aggressively, making strategic inroads into high-growth regions like Southeast Asia and Africa. We're looking at massive, rapidly urbanizing populations that are experiencing a wave of digital adoption and forming new middle classes at record speeds. Successfully capturing market share in these previously untapped regions, that's projected to add billions of dollars straight to their top line by 2026.
Next up, we've got innovative product launches. And actually, scratch that. Innovative might be a massive understatement here. The market is heavily factoring unreleased next-gen solutions into this forecast. Specifically, the rumors around their deep integration of enterprise AI tools and high-volume blockchain solutions. It's so crucial to realize these aren't just minor software updates. If these launch successfully, they're going to open entirely new, super lucrative revenue streams that the broader market hasn't even fully modeled out yet.
And the fourth piece of the puzzle, strategic acquisitions. You see, KSPI doesn't just build things, they buy them. They have a ruthlessly effective history of swallowing up smaller, agile competitors or highly complementary tech stacks to immediately bulk up their portfolio. Any major M&A activity executed before May 2026 is going to instantly inflate their balance sheet, giving them a massive, sudden boost to help cross that $1 trillion threshold.
All right, moving on to Section 2. Engines of massive growth, tailwinds, and drivers.
Now, what's really interesting here is that KSPI isn't just growing organically, they're riding some massive industry tailwinds. Their compound annual growth rate, or CAGR, leaves competitors completely in the dust. Because they operate in a sector driven by unprecedented digital transformation and this huge enterprise shift to cloud infrastructures, they've got a powerful macro current actively working in their favor. The momentum here is basically systemic.
Analysts are essentially banking on a perfect storm of growth drivers here. It's the synthesis of those sweeping industry tailwinds we just talked about, combined with KSPI pouring a massive chunk of their revenue directly back into aggressive R&D. When you take that benchmark tech, combine it with rapid global expansion into untapped markets, and support the whole thing with an ecosystem of powerful government and corporate partnerships, you create a growth flywheel that is nearly impossible to stop.
But hey, let's take off the rose-colored glasses for a second. Reaching a historic peak like this requires flawless execution, and we absolutely have to look at the sobering reality of the challenges ahead. While the bull case relies heavily on seamless global expansion and totally unchecked innovation, the bear case points straight at looming regulatory walls and some deepening macroeconomic uncertainty. Make no mistake, there are severe structural threats that could easily derail this entire forecast.
The primary headwinds here are no joke. First up, regulatory hurdles. The larger KSPI grows, the larger the target on their back becomes for international antitrust regulators and data privacy watchdogs. A compliance failure or an anti-monopoly intervention could result in multi-billion-dollar fines or just fundamentally throttle how fast they can grow. Second is competitive pressure. Rivals in this space are incredibly well-funded. If a competitor manages to undercut KSPI's pricing or suddenly launches a disruptive, superior tech stack, market share could literally evaporate overnight. Add to that threat number 3, macroeconomic uncertainty. We all know persistent global inflation, shifting geopolitical tensions, or sudden supply chain shocks can dramatically compress enterprise tech budgets, totally sapping demand. And lastly, pure execution risks. Achieving a $1.114 trillion quarter requires absolute perfection. A single delayed product launch, a botched integration of an acquired company, or just a bad management misstep could easily be the difference between hitting this historic target and suffering a catastrophic miss. Because of all this immense scale, KSPI has basically become the ultimate market bellwether. Think of their quarterly earnings as a real-time thermometer for the health of the entire digital sector. If they achieve this monumental forecast, that surge in confidence is likely going to lift tech and AI equities across global exchanges. But if they miss, it won't just tank KSPI's stock price. It will cast a massive, chilling shadow over the broader market. So what's the expert consensus? Well, institutional sentiment is still heavily bullish. We're seeing sustained buy and outperform ratings across the board. But, and there's a huge but here, analysts are explicitly warning that extreme valuation expectations are fully baked into the stock price right now. The optimism is totally palpable, for sure, but prudent investors know that the higher the expectation, the more violently the market is going to punish any failure to deliver. Okay, let's map out exactly how this timeline unfolds. Right now, present day, KSPI is locked into maximizing their R&D output and riding those macro tailwinds. As we move through 2025, expect to see capital heavily deployed towards securing footholds in those critical emerging markets we discussed. And all of this strategic positioning points directly to one day, May 11th, 2026, the day the entire financial world will be holding its breath to see if the trillion-dollar forecast becomes reality. Which really leaves us with one final massive question for this explainer. Will KSPI execute flawlessly and cement its status as an absolutely unstoppable force in the global economy? Or will compounding macro challenges cost the market to face a historic, punishing mess? The decisions being made in their boardroom today are going to ripple directly through our global economy very soon. Keep your eyes on the markets, folks.